And they say, well, they're looking for clients who try it themselves, screw up, and then they'll move in and take their money. That's what they want. So there's a whole industry out there trying to tell you that you can't make money in markets. The second thing is I can make money in markets. And that's going to take a bit of work, because the market will do its damnedest to prove to you every other day that you can't. And then I deserve to make money in markets, and I can help you with that, but I think maybe your mother would be better.
February 13th, Friday the 13th, 2026. Let's look at the trades I took today and go over the market. Here we have the NASDAQ on a daily chart. This is a 1 year frame that you're seeing. This is the market in 1 year's time. And what I want you to notice is that, yes, we are selling off. Sell-offs happen, consolidations happen. You can see these large movements. You can see areas where there's no movements and it's just consolidating. Right now, we're sort of in the middle of a selling off period. So 5 market days ago, we had a tipping point on the selling momentum. We had buyers start to fight back. And just as it broke variance with the recent heavy selling day, just as it broke variance right here 2 market days ago, we had a big reversal, which was yesterday. So going into the market today, we've got a bias on taking short positions, but we'll take long positions if they present themselves. It's just important to know what's going on a daily level. What is the daily momentum doing? Right now, we are in the middle of a sell-off. As this momentum pairs with increasing volume, we know that it's getting more and more serious and we can trust it more. So let's go into the trades we took today. We took 3 trades today, and the first 2 were in NASDAQ, and then the last one was in Apple. The first trade was right here. We have to go over some pretty cool stuff. So notice this. The price comes down right off the open. Price comes down, hits this area, and immediately rejects with this equally strong candle. That's pretty significant. We have a huge selling candle. It reaches some level, and then the very next candle is a massive response, a candle larger than this supermassive candle. That's telling you something. That is telling you something. That's very crystal clear. What level was this? What interesting level did this hit? Well, this purple line represents last week's low. The lowest point of last week's price action is represented by this purple line, and this dark blue is the pre-market low. So is it any surprise that we had a massive purchasing liquidity bubble right here? As soon as the price reached this area, a lot of buy orders got initiated and turned on. That's why we had that's why these levels are called critical levels. It's not like we can tell the future, but you need to be aware of these levels so that when price reacts to the level, you get more information that helps you make better decisions. My first trade on the day was right here. Why did I take this trade? Well, our 30-minute MACD going up. That gives us permission to take long trades. We're going up. The 30-minute regular hours is also coming up on the MACD. It hasn't crossed over yet, but this is the important one, the 30-minute extended hours. We're going up. We're in the green territory. Now, notice the 2-hour has been steadily building upward pressure for the past, well, that's meant each one of these bars is 2 hours, so this is a long time. Ever since almost a little bit before the close yesterday, the momentum has been shifting on the 2 hour. So overall, we've got an upward bias right now. Regardless of what's going on a daily level, the strategy is based on the 2 hour and the 30-minute, with our 3-minute chart being our execution window. So look what happens right here. Look what happens right here. What do you see? See anything interesting? A volume bar, a 2x3, a large volume bar. These 3 volume bars create the 2x3. 2 of them are aligned with the upside, green. Last one, greater than the first. That is a 2x3 volume confluence. Entered right here at the top of the candle, close of the candle, stop loss slightly below. The very next candle almost hit stop loss, and then the next candle after that did hit stop loss, making that a loss. Look what happened right here. Momentum sells off, comes back, starts restabilizing, boom. We get a volume bar greater than the previous three. It's also a 2x3, and it's also a power volume bar. So that's a volume confluence that we take seriously. We're on the right side of the momentum right here. Everything else is the same. Enter at the close of the candle, right here. Stop loss slightly below. Hit profit target. That was a win. Last trade of the day was in Apple. And it was, bear with me one moment, it was right after it retested the wedge. So I didn't mark it, but it was right, let me mark it now, one moment. Let's see, wherever the volume confluence is where I entered, right here, that's a volume confluence right there, yep. So this candle, I got it. So I see the price coming back down. Look, we're in a wedge. I see this wedge forming. We breaking through the wedge, and notice this double critical line. This is pre-market low and previous day low, right next to each other. That's an extremely critical level of liquidity. No wonder the price action did that around this level. What else do you see? This purple line right here, this purple line is last week's lowest point. What do you know? Do you see now what's going on with these critical levels of previous week's lows and highs, pre-market highs, yet previous day lows and high? All of these critical levels mean things, and they initiate buy and sell orders, and that's how you can find liquidity areas, areas of major liquidity or areas of very little liquidity. So here's what happens. We consolidate. There's a wedge forming with these levels. Breaks up, gets denied, starts coming back down. Now I'm looking for a volume confluence as it's coming down. I'm looking for a volume confluence. It happens right here, a 2x3. 3 volume bars. Last one's greater than the first. At least 2 of them are aligned with the trade. We're on the right side of the momentum. Look what happens. We enter right here at the close of the candle. Target's slightly above, right here. And I ended up taking profit right as it got to this level. Right as it got to this first level, which is where you're supposed to take profit. It's basically a 2-to-1. Right as it gets to that level right there, we take profit. So that was a win, and just barely. It then popped back up, basically hit stop loss. So it would have been a loss had I not taken profit at that area. So that was my last trade of the day. There were many other trades I could have taken today that would have resulted in great wins. But I only took 3 today, and that's all right. The reason I did that, I'll be honest with you, is because I don't like trading Fridays very much because the price action on Fridays is different from Monday through Thursday, and there's several reasons for that. That's not just me telling you this. There's several reasons for why the stock market from Monday through Thursday is a very different environment as compared to the stock market on Fridays, and there's several reasons for that. And so I just don't like trading Fridays very much, and I had a profitable week. This is my 3rd profitable week of 2026, and I just wanted to not only protect what I have done, but I also just wanted to decompress and just chill. So with all that being said, I'll see you in the next one. Take care.